There
you go.
you go. Recording from the house. All right, that'll work. Go for it.
Let's start with the yearly. Just start with the yearly, and we're still in the same scenario on the
You
yearly.
got everybody here, or is it
No,
time to start?
no, I'm just gonna record this for the recap,
Oh,
and we can stop it. Um, then we could kind of take off from there. I just, I'll just, like they could catch up from there. I don't really think they need much from the day. The the meeting's just gonna be like a cover of what we're doing and how to set up real quick. But this is the yearly. We got a lot of stuff on here that we didn't show before. We're gonna get rid of some right now that we don't need just to clear up the chart a little bit. Here we go. Actually, we're actually gonna clear up the chart a lot. Let's go to ES. And there's another week to then. Another week ended, and we're still holding the 200. We were below the 200, could not get above the 200 forever on this yearly chart, as it shows right there. We do have targets to the top side. We do have targets to the top side, and it's doing kind of like what we said it would do. Um, it is still basing here, waiting on the Feds this week to see what it does. We are almost, if you took a trend line, we're hitting the trend line. Can we still possibly go down? Absolutely. Absolutely. Right now, they put us in a situation where we have to look at this big candle right here. This is the candle that flipped the market. We were at half back, we held half back, but right here, as we closed on Friday, we did not hold that high. And I think it's just waiting for next week for the Feds. If the Feds report makes this go down, we don't know what it's going to do. If the Feds reports makes this go down, expect a little bounce and then expect a real big tank, depending on what they do. If not, if the Feds make this go up, which it seems like it right now, we are possibly looking at a breakout to these highs right here. Take out this halfback right here, hit this halfback, take out this high. We can still do that and still sell off, but we're gonna go with what they do. We don't really care what direction it is. We're just gonna set up and take it for what it is. Um, this week was all up, as you see. They kept buying the lows, buying the lows. So this is all buying. Right here is the only day I was undecided. Going into the end of the week, they took profit. That's all it was today. Took profit, but we really didn't fail any range to the downside. In fact, if you go to 30-minute,
trying to hold that half back of that whole rotation.
absolutely. So if you look at it, it's trying to hold near that half back into the Feds. So we got high, low, and we're at half back. So
Imagine that.
they're waiting for confirmation on this. Right now, the Feds increased their balance sheet drastically this week for the banks, which in turn makes it that if they're feeding the market money, they're going to continue this trend up, possibly. If they're not pivoting, the market is not coming down. Pivoting will be the fact that if they stop raising interest rates, we'll actually go down. If they continue to raise interest rates and say, hey, let's deal with this problem later on with the banks and see how bad it gets, and they keep feeding the market money, that means the market is going to continue to go up. You can't go against what they're doing. If they're feeding the market money, the possibility of the market going up is more likely. Remember, never fight the Feds. If they're feeding the market and they're saying that, oh yeah, we're going to control inflation, but they're giving money to the market in any shape, form, or fashion, the market will continue to move up until they stop pivoting. Now, say that they come back and they say, hey, we're going to raise the interest rates by 0.50. This will actually make the market go higher because they will sell when we are done with interest rates. Right now, it's looking very, very dangerous. Where is that to be? Oh, I'm short or I'm long. Wait for the Feds on. I think they report Tuesday or Wednesday. They're going to have their meeting, and that's going to be the deciding factor going into October. Now, can this actually last longer? Yes, it can. If they continue to raise interest rates and they feed the market money, there's no way the market could come down. So October might not be a big tank, but it'll be a coming back to this area right here where it's literally doing this. So we could make a bigger move than we expect to the high side because of what the Feds are doing right now. We could literally have a big, massive move to the high side because of what they're doing. It all depends on what they come out with. Now, on the Fed meeting, this thing's going to shoot up like a rocket. Possibly if they're still feeding the market money right here. It's probably going to come up here. And it could do that instantly. It's setting up for something. Remember, all that price action down here was them already knowing that the Feds were gonna bail out these banks. And if they were gonna bail out the banks, that means that they were gonna give money to the market. And if they're giving money to the market, there's no way you could fight inflation, because unless they come out with some law, which takes forever to take out laws to say, oh, we're gonna regulate banks, maybe executive order, but I doubt they will. The banks are going to continue to do business as usual, and that's usually take money from everybody else or try to make money like anybody else. So it all depends on the Fed's meeting. It's playing out just how we've been saying since January. It was a little shaky with the banks, and they thought that the drop is them thinking that the Feds were going to stop pivoting. We're going to pivot and say stop increasing interest rates. But now, since they already gave money to the banks, are they going to pivot? No, they're more likely going to continue to raise interest rates. And the only reason that seems that way is because Europe just did it this week. And that was the move that we got from the downside here up. When Europe said that, hey, we're going 0.50 basis points, the market took off. So understand that scenario. If the Feds come out and say, hey, you know what, we're going to kick this down the road a little bit more because of what happened with the banks, and we got to go 0.50 basis points, the market will probably go up because of that. Because they think they're going to sell the highs, they're not going to sell the lows on that. That's why this was looking like they were going to start selling very heavy, because they thought that the Feds were going to pivot. And if they pivoted, right, if they had come out and pivoted and didn't do anything about the banks, we would have took out this low right here, and we would have been here this week. And then we would have done something like this, possibly go and test that half back here going into the meeting, and then failed. But it's the opposite right now. So we're at the highs into the meeting. So the possibility of coming up here is very, very strong right now, especially how they set it up. That's why on Friday, I was not looking to sell this past that price down there. I was actually buying at the lows because it could have been a big move up for them to anticipate already what they're doing. But everything points to that scenario where they're gonna maybe increase interest rates by 0.50 or even 0.25 is still gonna make the market go up. The fact that they're not pivoting is still gonna be continuing this trend to the high side. All right, that's it for the weekly recap. We're doing a class right now, and that'll be recorded as well. Guys, we good?